Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, Global Strategist at Yuanta Securities. Mr. Yu, good afternoon. Thanks for coming on today.
Thank you for having me.
Well, stocks on Wall Street overnight ended with a gain after news that the UK was reversing course on the economic plan laid out by the government under Prime Minister Liz Truss. The Nasdaq up almost 3.5%, the blue chips on the Dow up more than 1.8%, and the S&P more than 2.6%. What's the story in the global markets?
Yes, as you said, there have been quite significant recovery coming through in the global markets, including U.S. as well as European market today. The main reason for that is, as you said, British government have decided to U-turn on its fiscal plan, and newly appointed Finance Minister Jeremy Hunt announcing that it will reverse all the previous tax measures, allowing the risk-taking to resume for the market. On top of that, if you look at the earnings coming out from the U.S. market, Bank of America jumped over 5% after reporting quarter results that is on the surprises to the investors. And clearly the net interest margin is improving. The loan growth rate is very strong, which is indicating that the economy is not deteriorating as fast as people were worried about. On top of that, if you look at the interest rate environment, a lot of people were expecting that interest rate would probably go up even higher than 5%, but it seems that some of the indications are coming out that the rate doesn't need to be going up above 5% in order to control the inflation. So if those kind of news coming through, this means that economy might not fall to quite significant recession, but rather might do a moderate slowdown. On top of that, interest rate environment could be topping out, with inflation topping out as well. So all seems to be providing some possibility for the market to further rise in the future. We need to watch clearly more carefully on earnings numbers. The results are coming in as we speak. So if we look at the third quarter numbers, if it comes in better than expectation, we are probably in good position to do some recovery.
Right, we'll keep an eye on the earnings as they come in, and somewhat similar story here in Korea today. It seems the KOSPI wavered a bit during the session, but up about 1.33% in the end, more than 2.2% on the KOSDAQ. Something of a bounce back for Kakao and Naver coming off their service disruptions the past few days. Tell us about the domestic market.
Yes, if you look at KOSPI, it's up 1.36%, and KOSDAQ is up 2.21%. Clearly, the recovery seems to be coming. As far as the investors, really didn't see any particularly direction by the foreign investors or the institutional investors or local investors. Well, at least the retail investors are the seller and the buyer is the institutional investor somewhat. But in terms of the story-wise, if we look at the market, most of the sectors that had shown corrections in the previous sessions showed quite strong recovery, including renewable energy and some of the stocks that fell very sharply, including the Naver and Kakao, which rebounded by about 3.3% for Naver and 2.2% for Kakao. And also, biosector seems to do quite well, and also the game industry, which suffered significantly, has shown some quite strong recovery. So all in all, it seems that the Korean market seems to be recovering from the sharp fall that we saw in a previous few weeks period. On the currency front, also the same thing is happening. Currency peaking out as much as like 1,450 territories has now appreciated to 1,423.5. So today alone had a very sharp drop by 12.51 to dollar. So clearly the won appreciating is allowing markets to do some more risk-taking at the current point in time. Of course, we need to look at more carefully what might be happening to U.S. interest rate environment, including inflation numbers, and also how closely the Korea's interest rate will follow. for the time being, Korea's 10-year government bond rate at 4.2%, most likely to come down rather than go up. And also market is already pricing in 5% 10 years government bond rate on the basis of current earnings numbers. So if interest rates are not going to further rise but stabilizes, then we will have a quite positive room for market to further rise in the future.
Well, interest rates are a major question. Other things out there, trade is one. The balance of trade last month came out at $3.8 billion in the red for Korea, now in a deficit for 6 months in a row. The customs agency says exports were up in September by 2.7% compared to August, but imports were up much more at 18.6%. What's going on with trade for Korea?
Yes, if you look at just the numbers, if you look at the merchandise export, it climbed by about 2.8% year-on-year September, falling from 6.6% rise in August. Clearly, global economic slowdown is affecting negatively on that front. Meanwhile, if you look at the merchandise imports, it climbed by 18.6%, which is the sharpest rise that we saw after August of 28.2%. And that number seems to be because of the currency. And if you look at currency depreciation, has been significant. And on top of that, the oil prices have risen quite a bit recently in the month of September, towards the end of September. So that causes some of the uncertainty in the market. Most of the Korea's export are basically intermediate goods or processing trade. So if you think that global external demand weakens, that causes the export numbers to slow down while we continue to import in order to produce goods. So cost of the good goes up on the basis of the currency. So in order for these numbers to improve, we need to see, number one, currency appreciation, and also number two, we need to see the currency stabilizations. So if you look at all these factors, we think that Korean market is in quite a bit of a volatile territories. But nevertheless, we think that the global competitiveness in terms of industry, including semiconductor and electric vehicles and various industries, seems to continue to be quite strong. So we need to see the macro pictures that causing the market volatility. But in terms of the competitiveness of the industries, we think that that's quite reasonably intact.
Got it. All right, Mr. Yuanta, we'll leave it there for today. Thank you, as always, for coming on the program. We appreciate your insights.
Thank you very much.